Hi, Tim Smith of the Smith Group. Today I'm here to give you your November market update. Happy Thanksgiving, everyone. So the story of the year has been enemy number one, inflation. What does that mean? Goods, services, food, energy, everything goes up in pricing, but I don't know if it's going up or that our dollar is just being able to buy less than them. Is our dollar becoming the peso? We've also seen on a national standpoint, home prices in the last 2 years have gone up 40%, which is shocking. Or maybe our dollar is worth less. Jeremy Powell, chair of the Federal Reserve Board, met December last year, March, June, and September, started tiptoeing around this talk of interest rate tick-ups, and he's gone full battle. We've seen them go from 3.22% all the way up to 7.04, which is what we're at today. Jeremy Siegel, my favorite, Wharton School of Business, what are his thoughts after the big tick up, the 75 basis point tick up that we saw a couple weeks ago, which rallied the stock market? Inflation is over, Fed is using lagging data. What does that mean? Interest rates are expected to continue to drift higher, but much of the rapid increase in rates is behind us. So what does this mean? Number one, interest rates again have gone from 3.22 to just over 7%. We have seen some slight tick downs in mortgage rates. Pricing of national average says home prices peaked in May, and we've seen some decline since then. Demand in real estate, and specific to Western United States, it was 93% more than today last year. And over the last 3 years, the three pre-COVID year average, it was 78% more. So we've seen a huge decline in demand. Home pricing here. There's nobody that can show me that when they take Orange County as a whole and then they take out coastal Orange County, that there's any significant data that supports prices have come down. Now, could they? They could, but there's some things that we're going to talk anecdotally about that. Inventory, and I think we are definitely seeing a tug of war between low demand, which we talked about the last 1 year and 3 year average and how much we're down, but we're also talking about inventory. Today, we hit in Orange County just under 3,500 homes available on the market. Now, if you look at the last 3 year average, that's 55% of what we've seen over the last 3 year pre-COVID average, and that is 70% of what we've seen over the last 10 years, so still very low inventory. Buyers, this is what I would say. In January, when I was talking to buyers, every buyer was just, I wish we could get a little reprieve. I wish we could compete. Every time a house comes on, it's already sold, multiple offers. You fast forward 7 months, and now buyers are saying, I need a 70% discount to buy, right? Which is unusual and strange. What I would say for buyers, if you can afford the house, you can afford the payment, you have life events that make you want to move, focus on ROL, not ROI. Not the return on investment, your return on lifestyle, because this has been a better time to buy for those that are really looking to buy than I've seen in years. Understanding interest rates are higher, but the great caveat for me would be when people are asking me what to do, I ask them, well, are you looking to sell in a year? No. If they say yes, well, now's not time to buy. If you're looking for the next great place and you have a 5, 7, 10 year horizon line, now is a great time to buy. You can actually get your terms, your price. If you want to grind a little bit, you're seeing deals where you can. But again, pricing overall, coastal Orange County has not gone down, if anything slightly, but it's questionable. Sellers, expect days on market to increase. Now, coming out of this whole COVID environment, if your home didn't sell in 1 day, you felt like, it's never going to sell. If you look at historic markets here, we are nowhere near the days on market we've seen in 2019, 20, 2008 through 2012, or even 15 and 16. It takes time to match your perfect house with the perfect buyer. Keep in mind that we've seen demand from out-of-county buyers that was average between 2010, 2020, about 12% of the marketplace. That has increased with COVID to about 50%. It takes time for people to get here. They're worried about Thanksgiving. They're worried about Christmas. Don't worry, stay true. Make your house as model perfect as you can, price it with energy, and stay the course. So I have a Thanksgiving message because I think that's where we're at. And this whole talk about recession is like a cuss word to me, right? Now, are we in a recession? Are we going into a recession? Well, yes, we are. Well, I want to ask you a question. Do you have to participate in a recession? Think about that. Do you have to participate? Because I'm not. And so what I want to do is I want to replace recession, especially going into this time of year where we have so much uncertainty, doubt, and worry, and then you add on the holidays with angst and things out there that you can't control. I want to replace the word recession with gratitude. It's a paradigm shift. It's a perspective. Look through new lenses. Now, Harvard and Stanford did a study, and they say there is only one way to guarantee happiness. And this is a gift to you because I want to just tell you what that one way is. And as simple as it may seem, trust me, 3 things, 30 days, they guarantee you can replace the angst, the doubt, the worry without a pill with happiness. Number 1, write 10 things a day that you're grateful for. Number 2, say 3 of those things aloud to somebody else. And number 3, rinse and repeat and do it for 30 days. It's a perspective change. And I think today, more than anything, it's about focusing on what you have, not on focusing on what you don't have, and figuring out how to be grateful for those things, because what you will see is abundance and not scarcity. And opportunities are often wrapped up in challenges, in anxiety, but if we don't have the right perspective, we'll miss them. Be grateful for what you have. Tell the people that you're with how much you love them. We have so much to be grateful for. And let's focus on ROL, not ROI, return on lifestyle and memories, not return on investment. Not everything is economic. And my message to you is enjoy your Thanksgiving, enjoy your holidays. I know that the Orange County coastal real estate market in Orange County will pick up again next year. We will see the tug of war of low demand and low inventory change, and what I'm expecting, because if you look at just the history of Orange County, we no longer have new homes. All of that inventory was sold out, was built out, was developed in 2019. You had COVID, where people's paradigm has shifted about where they really want to live, especially with working remotely. That's here to stay. And the incessant need to focus on safety, lifestyle, climate. We are seeing people from all over. And even if you call me today and you said, I want to buy this home, inventory is so low, I'm not sure we're going to see that for you. So enjoy your holidays. Look forward to seeing you next month. Thanks.